like to take a brief second to talk about the project where we're going to analyze a company. In the very first research document, you're given a company that we're going to study in this course. One of the things that I ask you to do, obviously, is to gather some data. So you're going to ultimately go out, you're going to find 4 or 5 years of annual reports, and we're going to use the financial statements to generate the data for this analysis. So let's talk about how we do that. When you go to the financial statements in the annual reports, obviously you'll find some data. There's the income statement, there's a balance sheet, obviously. There's some incremental pieces that we'll gather from the statement of cash flows. And from that, we're going to enter that data. It's fairly simple to enter the data. Number one, don't add all the zeros. Only use the data that's there. Do not add any other numbers. For instance, just the yellow boxes in this analysis are data entry boxes. Everything else, I want to make sure I protect this sheet. Everything else requires a calculation or a formula that is calculated. You see, these are all formulas. So what I would like you to do, number one, is save this by reviewing. Go to review, protect the spreadsheet, and then save it. So just do file, save, and then save it with some name that you may have, your group name, etc. This way you have the document saved. You can archive it and share it between students. So let's think about the data entry. Again, you gather the numbers from the spreadsheet or from the annual reports of the company. Couple things to keep in mind. Number one is the data goes backwards from right to left. So this far right column will be the most recent annual report that you have. Sometimes we'll have the current year, such as this year, 2017. However, some companies have an end of year fiscal year end, so 2016 may be the most recent year that you have. It really doesn't matter. We're looking for the historical data. You enter the data in these yellow boxes. Again, a couple things to keep in mind as you're entering. This data here, the interest expense, you have to input this as a negative number. You have to look at the financial statement to understand how they are entering the data. Sometimes they'll give you a net number, which is the income plus the interest expense. If you get 2 line items, then you know they haven't given you a net. But if there's just one interest item, a line item, then you may have to go to the footnotes as you see in this little note. So you go to the footnotes to see what the values might be. The expense items that you enter, interest expense, EBT, right? Or excuse me, and taxes, you have to enter them as negative numbers so that the spreadsheet works. At the very bottom, dividends per share and the stock price year end. Those are things that we looked up and we gathered from the financial statements and one of the research projects. So you'll enter that data from that information. The fully diluted earnings per share are always available in the actual annual reports. As we go down, again, thinking about the balance sheet. Not every balance sheet is going to fit this in a nice, even-handed way, if you will. There will be things that are extra. There may be things that are missing. Whatever data you have, plug it into the yellow boxes. If you don't have data, if something is missing, it will fill into these plug areas. Again, for the formulas, we don't need all of the information. So this just funnels the information that we need for the formulas. When you look down below, there's a thing here that says Notes Payable LT, which is long term. Sometimes Notes Payable will be noted in the current liability section. Most of the time it's going to be in the long term section. You have to be aware of which side of the current liability line that information lies, and then input it on the proper side. You'll also need to know the number of shares. That information comes from the annual reports. We just gather these line items from the statement of cash flows from the annual reports. Again, make sure you denote the proper sign on those cash flows when you enter them. Now, the other part of data entry is to enter some industry average ratios. You're provided with a document that has the industry averages. So what you need to do is gather that document, read or watch the video on how to enter the data, and enter that data into these spreadsheets. Once you do that, please save the spreadsheet, of course. But once you do that, then we can start to do some analysis. We can look at the information we have. There is a whole series of financial ratios that are calculated for this company for you. So you don't have to do all the math and the formulas. It's already done for you. It's taken care of. You're going to provide me with a document, a Word document where you've copied this and presented it to me so that I can check and make sure that we haven't made any mistakes. Once we've checked that, then you're ready to do the analysis. But there's a lot more stuff that this spreadsheet will do. We can look at what are referred to common size statements. What is the percentage of interest expense for this company? The percentage of income is 0.45%. So 0.45% of the company's income goes out in the form of interest expense. Net income as a percentage of sales, if you look here, we have an average number. Net income is about 16.12%. We can look at common size balance sheet. On average, what percentage of inventory is in this company? When you look across here, they maintain about 1.75% of their total assets is inventory. Let's go back up to the top. We can go further to the right now. More information. Now we can look at for changes in the income statement. How are things changing? Something we'd like to know is what's the percentage change in sales? This company on average has maintained about a 7.3% growth rate in net sales per year. So net sales are growing at 7.3%. Net income is growing by 17%. So the profitability is growing at a greater rate than the sales are growing. We can also look at changes in balance sheet line items, right? How has that been growing over time? Next, assets as a percentage of sales, right? So for this company, for them to maintain their current level of business, right, they've had to maintain approximately, on average, about 15.7% of their assets as a percentage of sales is what their asset base has to look like. This might become important when we're looking at and trying to analyze things like liquidity. And is the company doing what it's supposed to do? How does the company finance itself? Again, at the bottom here, we can see that over this last year, about 37% of the company was debt, long-term debt, and 62% was equity. So we now know what? That they're about a 2 to 1% of debt, of equity to debt. So this company has more equity than it does borrowing. We can also look at other things. We can analyze the profitability of the company. These things all come up in presentations along the way. We can look at cash conversion, look at the liquidity of the company. We can look and analyze something referred to as economic value added. We can analyze the changes, the actual economic changes to this company. We can analyze the company's free cash flow over time. We can also analyze many, many other things. But in the end, one of the big projects, one of the things we'd like to be able to do is we'd like to be able to forecast what's going to happen in the future. Again, I'm not going to get into details here, but there is a video that will demonstrate and illustrate how we can predict what's going to happen to this company in the future. And just in conclusion, the end result is we have 5 years of data that you got from annual reports, and we are then going to forecast 10 years of financial statements. That then gives us some pro forma ratios. So now we have those same financial ratios, but now we have a forecast. We actually have 15 years of financial analysis and forecasting of ratios for these companies. So again, this process is kind of involved. This is a very big spreadsheet. Hopefully we can use this to answer some questions about this company. Look forward to talking to you soon.